Welcome back. You're watching Business Morning on Channels Television. Next week promises to be another crucial week as we count down to May 29, the anniversary of this administration, that is the President Muhammadu Buhari-led administration. And so next week, starting on Monday and Tuesday, the Monetary Policy Committee of the Central Bank of Nigeria will be holding its two-day rate-setting meeting. A number of issues have come up, both domestic and international, that a lot of market investors and analysts are actually hoping will be considered as the committee makes its decisions on rates. And of course, there's the monetary policy rate and the exchange rate. So ahead of the meeting, what issues are likely to be looked at by investors? I'm talking to Robert Omotunde now, who is an investment analyst with Afrinvest, to get his perspectives on these particular issues. Good morning to you, Robert. Thank you so much for coming to the studio.
Thank you, Harry.
So, talk to us about what your expectations are. Next week is a very, very crucial week, as I already mentioned, for both domestic and international investors. Anybody who's really interested in doing business here in Nigeria. And so, do you think the way the market is right now, with inflation at 13.7%, we're expecting GDP numbers to come out later on today.
Sure.
Do you think it is a rare opportunity for the Monetary Policy Committee to do something drastic?
Indeed. The whole world is kind of waiting for this meeting. It's a defining meeting, and like you mentioned, is one of those meetings that have not come in a long time. Particularly as it relates to the exchange rates. Okay, so that's why we believe that a lot of people, a lot of investors, in fact, the whole financial system in Nigeria, is crossing their fingers and they are waiting for these decisions to be made. Particularly as it relates to the exchange rates, you recall that in the last week we saw a major move by the NNPC to kind of liberalize the downstream sector of the oil and gas. And of important note in the decision was the exchange rate that was fixed, at 285 naira to $1. When NNPC said any importer can, source their currencies from autonomous sources. The implication of this is that we've seen more pressure, especially at the parallel markets. We recall that after CBN banned they excluded some items, about 41 items, from accessing forex at the interbank market. We've seen a lot of pressure in that side of market, which was more or less at equilibrium of about 320 naira to $1 before the pronouncement by NNPC. Following that pronouncement, we saw forex market rate at the parallel segments rising as high as 340. As I speak, it's within 340, 350, range. So this is what we think. Of course, that kind of pronouncement came from the fiscal authority. We would expect some form of complementing policies.
So when you say complementing policy from the CBN,
yeah.
I know I had conversations yesterday with Wale, and Wale said we're looking at a 200 basis points increment in the monetary policy rate. So moving 200 basis points forward will put us at 13 or 14% for the 14% for the monetary policy rate. Now, do you think this will kind of in any way stimulate investors' confidence?
In our view, most of the macroeconomic numbers that we've seen, inflation rising as high as 13.7, from the 12.8 figure in March. And our fair projection for May is that inflation is going to rise as high as 14.6%.
I think that's a sentiment shared by most
exactly
investment analysts
for the month of May. But if we are addressing interest rate, MPR at this time, without dealing with the main issue, how did we get here? It's like trying to treat the symptoms without necessarily looking at the cause of the sickness itself. So that's why we believe that the most important decision that the committee is going to make in this particular meeting is to talk about what their policy will be going forward. If we're going to avoid using any D word as it relates to the currency market, there need to be a kind of sort of currency adjustment, just to kind of take out the spread, the massive spread that we have currently between the interbank rate and the parallel market rate. In all honesty, we sympathize with the CBN looking at the level of receipts in terms of dollar inflow into the system. You know, as we speak, the reserves is currently at about $26.6 billion. You know, any right-thinking CBN does not want a further diminution of the reserve. But again, the CBN needs to kind of find a way. It's more like the CBN is putting itself in a tight corner. You know, whereas you can sort of liberalize that space and allow a lot of autonomous sources of inflow. You know, we've seen FPI, FDI, you know, kind of restraining from entering into the market. And the reason is because of the currency peg, in quote, you know, which is not allowing them, because an average foreign investor is careful of coming to the market now. So we believe that MPR, you know, in our view, is not as important as addressing that issue. There's a way market prices, you know, there's a way interest rate is priced in the market, you know, by other forces other than, you know, looking at it from the monetary policy rate. Indeed, we've seen markets moved below or above the MPR, you know, in most cases, even though rates have been fixed at some point. So we believe that addressing MPR now, although the committee will be in a tight corner to stay consistent, because in the last MPC meeting, one of the notes, one of the things that the committee noted was that they need to ensure a kind of real interest rate environment, which was why they took MPR from 11% to, you know, to 12% at the last meeting. But we've seen inflation, you know, rise above the current MPR of 12%.
Very comfortably now in 2 digits.
So if the committee wants to be consistent, okay, they could probably say, okay, let's take MPR higher to say 13%, or if they want to be proactive, looking at the level at which interest rate is, inflation is rising, say, okay, we'll take it to 14%. But again, that would not, in our view, solve the issues, you know, because the rates that we've seen in the last few days, you know, talking about yields that are rising as high as 14%, they are more in expectation because the CBN has already guided that they want to ensure a real interest rate environment. So market is pricing future expectation of interest rate, and that's what we've seen in terms of yields.
You already mentioned it. It seems as if they're going ahead, if for any reason we see any considerable shift in any of the policies, whether for the rate or for exchange rates now, it will mean that they're pricing in all the other factors. But then you talked about taking care of the issues before addressing, taking care of the symptoms before going ahead to treat the sickness. So the symptoms have already been there. Do you think that whatever decision it is that is taken now will begin to address those symptoms?
Well, in our view, we think we should go to the cause of the sickness.
The cause?
Yeah. Now, the cause of the sickness is the misalignment in foreign exchange pricing, or exchange rate pricing, if you like. In a situation where there's a huge spread of about 70%, you know, between the official rate and then the parallel market rate. Indeed, the interbank rates, interbank market more or less does not exist.
You already mentioned that, Robert.
Yeah.
So, in trying to now, we can't align. We can't align the parallel market and the interbank foreign exchange market. But then we could try to bring it closer.
Sure.
What can be done, or what should be done? What should the committee members be looking at doing to ensure that they bring this very huge gap? They reduce it rather, not bring it together.
Okay, we believe that in this meeting, the CBN has to take a policy of a currency adjustment, which would take the official rate closer to the rate that was guided by the NNPC at 280. You know, already the market is already pricing exchange rates at above 280 naira to a dollar, even before the committee, before NNPC made that announcement. So the CBN has to do something close to, you know, what the market is pricing. In our view, maybe around 260, 270, you know, could help in, first of all, shrinking the gap between the two markets, and then in a way, there's a way market forces try to, take out all the distortions, and we always see an equilibrating price,
But then
the
how does the CBN now price all of this in? Because they're looking at it that it's in the best interest of the country to keep it at the rate that they're keeping it at. So if they want to follow what the markets are already dictating of having it at 260, 270, or even 295 naira to the dollar, then there's a lot of moving around that they have to do to make sure that there's a balance.
Well, one of the things we've also noted is that taking a currency adjustment at this time without removing some of the controls will be counterproductive, which means that if the CBN decides to do an adjustment and does not remove the restrictions, particularly with the ban of 41 items, the pressure will still continue. Okay, both from all the sources that are tracking the parallel market. So first, those restrictions have to be removed. It does not mean that the CBN must necessarily meet all the demand at the interbank. It's more liberalizing the market. Let there be inflows from FPI, from FDI. Allow the banks to play, more of the CBN playing the big role of intervening when they have to.
But then you will still have speculative trading,
yes,
the same hot money that you have coming in, the same reasons why we had the Central Bank of Nigeria closing the ARDAs and the WDAS, just to make sure that they have a tighter control of the amount of money in circulation.
Of course, you cannot always rule out speculations, and that's why the CBN cannot continue to hold on to the control. If you continue to control, speculators will always find reasons, to arbitrage on the market. The best way is to make the market more or less free for us to operate. Let market forces determine it. When the market always wins, and that's our position, and we can always relate to examples. Even at the parallel market, the price at which you see at 320, 340 may not necessarily be the equilibrium price, but because the system is aware of the distortions, so a lot of market speculators and those who want to take an advantage of the market, we always see an opportunity to play.
Okay, so now how do you think the markets, now let's price in that's the fixed income segment of the market, the equities market. How do you think they're going to play next week, looking forward to this meeting?
Already, the market is waiting, and that's why you will see that in the fixed income segment, yields have been on the rise. The last auction that was conducted by the DMO was in anticipation of the likelihood of the committee taking a major decision to hike MPR, and that's why you see that only about 50%, of the subscription was filled by the DMO, because the range of bids were just too high in terms of the cost of borrowing for government. Okay, so what we'll think is that at the end of this meeting, okay, most of the investors, who have been taking position in anticipation of MPR, have set our own position that we don't necessarily think that taking a decision on MPR now, will solve all the issues that are addressing exchange rate issues. But in any case, by the end of the meeting, whether or not MPR is hiked or is retained will determine how yields are going to be priced, in the next meeting. Peradventure, we see a hike in MPR. Other forces of the market, will come into play and determine yields movements.
As I said, it's a crucial week for us next week. But thank you so much, Robert, for coming on the program this morning and sharing those perspectives with us.
Thank you.
Business Morning continues in just a moment. We're turning our attention to the Nigerian equities market to see what the mood is like with Rotimi Fakayejo in just a bit. Stay with us.